What's going on, guys? This is the boy CD Trades back again with another video. I'm recapping my trade that I took January 31st, and today is February 2nd. So I'm just gonna show you guys what I took, my losses and my wins. Right? For me, it was a negative day. I was negative 40, and I'm gonna show you what caused that. Right? So January 31st, Friday at 8:30, we had high news, right? High impact news at 8:30. I don't trade 8:30 because of it being pre-market. Sometimes you'll see me trade it if I see my setup forming beforehand, but predominantly I like trading the 9:30 opening bell. And then 9:45 we had the orange candle, and I like to wait 15 minutes after, like ICT says, after news comes, just wait 15 minutes for that volatility to slow down so you guys can see the precision in the markets. And then 10 o'clock, we had yellow, which doesn't impact the charts at all, right? Okay, so right here, as you guys see, this big opening gap, I felt and I had a bias of being biased because of Donald Trump going into office. So Donald Trump going to office, everyone and everything is surging up, right? So when we were going down and we had this long wick down, what happened was the next candle couldn't even go to the consequent enroachment, right? Couldn't even go to the medium of that. So that gave me a sense of relief that, hey, you know what? We're bullish. This is bullish signs. And the next candles, as you see, is continue going up and doesn't want to see anything going down. And then you're going to see my markup now because I hit it. All right. So I marked up from, let's see, as you guys can see, I marked up from here all the way into this candle. The reason why I didn't mark it from this candle right here is wick, because this candle is not touching this candle. So that means I'm going to mark it up to the highest point of this candle. See, good, perfect. And then to this candle's high right here, right? So this candle's low, I'm not using it. I'm using the actual candle. And then the third candle, I'm using the actual high because it's covering the second wick. I'm sorry, the second bar. So let me bring it back. Okay. So I'm waiting to see how price is going to react. Is price going to go through it and continue going up to buy side liquidity that I marked up here days prior, or which is January 25th? That's the buy side. Okay, so that being said, let's go to the hourly. And as you see, prices making higher highs, higher lows, keep going up, and into these. These little blue lines right here, this blue box is my first presented fair value gap. So I'm going to show you guys. All right. So in the real time, this is real time. So I marked up the opening range gap, right? So we had our opening range gap premium because we closed down here, but we opened up at here at 9:30. So that's why it's a premium gap. So that being a premium gap, price being up, in my head, I'm like, oh, okay, you know, the first 30 minutes, price wants to what? Close this gap, right? So the opening gap, price wants to go down there. I'm not saying price has to go all the way down there, but at least the opening of the middle gap, it's going to be closed, right? So that's why my first analysis was, even though we were biased to be bullish, my bias switched to the first 30 minutes to be what? To sell. To where? From wherever we are. Let me see if I can find something to show you. Shorts. From wherever we are to the midpoint, right? So that's what I wanted to see. So once price opened up and went down, so this is the fair value gap, the first presented. Let me open this up so you guys can see. Let me go to electronic trading hours. All right, so right here is the first presented fair value gap, which starts directly at 931. Like I said normally and before, 930 we cannot use it. So 930 we can't use. 931, look at the candle. Right, all the way here. So with this, let me Price went up, continued going up, and then it started going down. This is when I did my sales, right? I saw this, price came up, came back, and this is where I made the mistake of getting in. After I saw price do these 2 wicks. So let me show you my execution. And this is, like I said, this was on Nas executions. All right, so I went for a sell right here, right? So price went up, then came down to the first presented fair value gap, and then price went up into the consequent encroachment of the first fair value gap. So price went into the middle. This is when I saw my sell. So I waited for this candle. This candle showed me from this wick, oh, we're bearish like the first 30 minutes, like I said we were going to be. And so I waited for that candle to finish to see what the next candle do. So the next candle started here, it opened up here, and it went up, and then it started coming down. When it started coming down, I was like, oh, that's my time to get in. As you saw, I got close to the middle of that fair value gap first presented, and we went down a little bit. But price had used this order block right here underneath and came back into the fair value gap and came back in, came out down, came back up. So when price came back up, I had put my stop loss. Where's my stop loss? Here, right? Top of this. So my stop loss, so I could show you guys. Guys, don't be confused. That was my stop loss, right? Price should not go up there. Price could continue flopping in and out, but I do not want it to go past here. Once it goes past here, this is basically telling me, hey, you know what? We are off sides. So price went there, right? And came back. And I was in drawdown for a little bit until I was taken out. So let's make it a little bigger. And this is the 1 minute time frame. So right here, guys, I got stopped out on top of here. That's when it validated for me. But before that happened, when I saw these 2 candles, I automatically thought, I think I'm in the wrong side. We're not going down here anytime soon. If we do go down, we're going to go down during the afternoon session. But right now, it's showing me bullish. And I was like, yo, you know what? I'm not risking that much. Let's see if this is going to play out. So that's why I didn't take it out. So once I saw, I didn't even see this candle, but I saw these 2 candles. I'm just seeing this right now. So price went up, came back down, close to my stop, came back down. I'm like, oh, okay. Once it came to the top of the fair value gap and wicked up, not once, but wicked up twice and then started going, I should have just cut my my loss short and just switched my bias right away, knowing the fact that I'm going to have to find a way to get into, right? But at least I'm not taking a big loss. So this loss cost me about $400. So then I waited. I had waited. I did not trade MNQ anymore. I went to ES. Okay, so ES is the same thing. Sometimes they show almost the same thing, but sometimes one is lagging, right? So it's easier for you to get in. So I'm trying to find a way to get in. And this is a good way for me to get in. All right. Where's the 930? All right, 930. It's right here. Let me mark it up for you guys so you guys don't get confused. And so I could look at it years later, see how far I came. Okay, so 930 right here, this little line, as you guys can see. And I ended up buying, right? So at 930, price went up. It took this high, went back down. Use this fair value gap right here. And just like the micros on NQ, this was 937. It used this fair value gap to shoot up. It went up and then back down again. So when I got in, I was waiting for price to come back down to this fair value gap, but price did not. So how did I get in, guys? I used this what's it called? I'm losing my train of thought right now. I use this not order block, but breaker block, right? So I use this breaker block right here. That's what I used to get in. So I use this breaker block. Right here. So a high, a low, a high, a low, and then a higher high, right? So that being said, that's when I used it. And I got in almost at the top of that fair value gap because I lost 400. So I was like, yo, you know what? I'm waiting for price to come back here, and price hasn't come back here. So let me just wait for price to come back. So price didn't come back here. So eventually I seen that, and I put in 6 contracts right here. From 6 contracts, my low, my stop loss, long, where was it? And I wanted to mark up. Let's go to the hour so I could see. I had one to the hour to go see. Here. All right, let's go back to the 1 minute. Spread it out so you guys can see. All right, so as you see, 7 to 1. All right, that's my risk reward. So my stop loss was down here, right? I didn't want to go too far down and have a big stop loss. I was risking 5 micros on the ESP or ES. All right, so price went there. As soon as price went there twice, price automatically shot up, right? I didn't take anything out. I just waited because I wanted to make my money back, right? So price continued going down. So price went back up, and I took 2. So in my head, my stop loss, I'm not stop loss, my terminus was all the way up here on that 1 hour that I saw on the left hand side. So I was waiting to shoot that. But at the end of the day, I had to remember, okay, today's Friday, and we already took about what? About 30 to 50% retracement, right? I'm sorry, 20 to 30% retracement. So I had to figure out, hey, you know what? I might not go all the way to my terminus with the buys, so might as well just take out my profit when I can. So price was here. I was thinking about taking my profit there. Price went back down. I was like, okay, so once we take the highs again, I'm going to take out. And that's when I took out 2 right above that swing high, right? I'm sorry, that eco highs. That's when I took out 2. And then price went down and went back up again. Once price went down here, I was like, okay, you know what? We might be switching direction. Let me just take out my my last remaining 3. So that's how I became negative 20. So this is a demo. As you guys can see right here. So the first one I lost. Only took 2 trades. Lost at 422, right? Lost 422. Then the second trade that I took partial the first one, 180. And then my second one, I took my last partial of 3 contracts I had remaining left. I took 200. So I was negative $40. But you know what? I'm okay with that. Like, even though I was down 400 and I could have been up 500 if I would have just, you know, cut my profit early. But I chose not to because I want to ride the wave a little longer, right? I don't want to cut short, especially my wins. Because back then when I first started, my wins would cut short because I was so happy to get my gains, but my losses would be so extravagant, so high. So I needed to avoid that. So to avoid that, now it's, hey, you know what? Let me just take partials. Let me get close into my terminus and let one runner ride as long as I can until it stops me out, right? I don't want to bring my break even right away. But that was my trade on February 31st. So let's go.